In this video, guys, let's look at the attributes of a great trade. Stick around. Hey traders, warm welcome to you. Thank you for joining me. All right, so the attributes of a great trade. What do I think are the attributes of a great trade? Now, no, it's not a trade that's profitable. Yes, it's nice to have profitable trades, of course, but it's not always great trades. You can literally come in, toss a coin, buy something, go long or short. 2 hours later, you close it, you make money. That's not a great trade. That's just a pure gamble. So we can't judge it based on P&L, but there are some things I think we can judge the trade on. And from a kind of operational perspective, it allows us to perhaps come up with a list of things. This is not our trading plan, it's not our rules, not the specificity that we go into with that, but more a case of, okay, as long as I've got these top 5, 6, 7 things, then hey, I'm at least aligned in the right sort of realm of what I'm expecting, or at least I'm doing the right kind of thing. So, number one, well-defined setup. I think it's important to have a well-defined setup as you go into the trade. Now, that could be absolutely anything. For me, it's a filtering process that brings the idea in or brings ideas in, and a trigger that actually allows me to pull the trigger and get into the trade. And each one of those sits in different buckets depending on trading mean reversion. I'm trading a trend-based environment, range break fake type trade, afternoon break, whatever it may be. I'll have a setup and the trade should fit into that. Now, we're not looking for perfection here. Trades don't always sit and look absolutely perfect and absolutely spot on. Sometimes they're a bit, not that, don't look that clean, but they're still past the filtering criteria. They're still, passing the trigger criteria. So having that well-defined setup, and then your expectations for the setup goes in that bucket of the setup. Like if I'm trading a mean reversion trade that's the top of a range, I'm probably looking for the middle of the range or the bottom of the range as a full exit. If I'm trading a good strong opening drive, little pause, little flag, dips lower, then wick straight back up, then I could be on for the whole day thinking I might end up getting a nice close at the highs. Different expectations, different setups. So it helps frame the idea. So well-defined setup is crucial. The mistake I think we can make as traders is we say to ourselves, hey, you know what, I like this, I'm going long, and then you're like, well, where the hell is it going to go? Where's my exit? And then in my mind, like, should I trail it? Should I do this? Where's the target? Should I come out of a resistance level? Should I wait for this? Should I that? Because you haven't got it in a setup framework, it's very difficult to manage it effectively. And number two, obvious and sensible stop level. I think that a great trading set, or the attributes of a great trade, or a great trade, is where you have a nicely defined stop level. Now, let me just kind of say this as a caveat. You can still take a trade that's a good trade, but it might not be a great trade. A good trade, you still make money from good trades, but if you really want to go one step higher, then there's great trades. Now, you can use a grading system adjust between the two. Why do I say this? Because you might have a setup that is a nice drive. Let's go to that example again. Drive, pulls back, wicks, starts to go, looks strong. It's at the open if you're a day trader. Everything's ticking the box. You take it. The obvious place for the stop is under that little flush to the downside that pops back up. Obvious place for a stop. And so, that's very easy to say, yes, this is part of attributes of a great trade. Sometimes you might take a trade and go, hey, there's not really an absolutely great place for a stop. I like it. I'll put my stop an ATR width or something where you're just using the framework of the volatility as a stop width rather than the actual technical level. That's probably good rather than great, but it's still okay. So, obvious and sensible stop level is is a good thing to have. Another one might be you checking a flush to the downside, for whatever reason, pops back up, tries to revisit, doesn't quite go there. You marking that as a flush, you take that second low, that higher low, you're in. The obvious stop is under the flush level, because if the price goes back below that flush level, it's not a flush, it's a downtrend, you want out. So any setup where you have that obvious stop level, to me, is a great tick in the box. Number three, clear targets or a trail strategy. So I mean, if you have, this is why I put kind of two different definitions here, or two different targets, if you like, in your mind. The clear target is, hey, this trade I think is going to hit lows, or it's going to hit the overnight high, or it's going to hit all-time highs if you're swing trading, or whatever it may be. It's going to hit a moving average, some kind of defined target, trading to an upper Bollinger, upper Keltner, something. There's a clear defined target for the setup. That's nice, because all you got to do is hold it to that defined target, or you get stopped out. Or your read judgment area if you're kind of going and finessing it a little bit. But That's nice. That's an easier way to frame it. Or you have a trade that's, hey, I'm preempting the break, I'm in the break, it goes through to highs, now I'm in a trailing situation. It's not a defined target as such, but you have a defined exit strategy. So if you're long swing trading, you might say, hey, I'm going to come out on the first close below the 5 moving average, as an example. High volatility, high aggressive move, bang, 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 green, 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 one red day, you're out. So something where that's predefined, again, makes it so much easier to take the trade, so much easier to quantify your risk reward ratio, just makes things a lot more comfortable, confident, and happy to take the deal. And number 4, there we go, straight into it, a good risk reward ratio. I think all trades should have a decent risk reward ratio, meaning you're risking 1 to make 2, 3, 4, 10 plus. You're not always going to get those, but there are times when you can frame a trade and go, you know what, this is a 5-to-1 deal. And waiting for those just makes a difference because, you know, as we know about maths, guys, you take 50-50 of those, half them work, half them don't, and you've got 5-to-1, it's going to be profitable over time. So again, this kind of comes in a little bit of combination of the obvious and sensible stop level and the clear target or trail strategy, because then you can define that risk and go, right, my stop's below that tail, my target's at the fresh high, or my target's at all-time highs or at Globex highs, or whatever it may be. That's a 3-to-1. That's a good place to take initial profits, and then I'll trail and look for a 5-to-1. So maybe I'm getting 4-to-1 out of it if it works for me. Fine, great, tick in a box. Rather than saying, actually, I'm going to take this trade, but the stop's got to be 100 points. Really, I'm only looking for 100 points upside, 1-to-1. Don't take it. Just not worth taking the trade. Number 5, higher time frame supporting the idea. I like this because for me, support comes from the higher time frame players. So what I mean by this is, if you're taking a pullback long on a 15-minute chart, the lower end of range, I want the daily chart to be in a nice uptrend. I want that to be in an uptrend because that rising tide is going to help my trade. I don't want to really be misaligned with that daily trend and trading against the daily trend. If I'm using the daily as my higher time frame, I don't want to be shorting at highs thinking, oh, now again, this is where we go back to the thing at the initial part of the video, guys. It can still be a good trade. You can still trade those and have a little sneaky short to the short side. Just today, I was shorting for a long time and shorted indices for ages. There's an opportunity, DAX was getting wobbly. It came in my setup bucket, I took it. It was against the higher time frame, fine, so it's not a great trade, but it's set up enough for me to want to take it. The point is, the great trades are when you align with the higher time frame. So you get that short-term setup, you're aligned with the higher time frame so that you have that wind behind you to make life easier. I think anyway that makes life easier for you. So 1, 2, 3, 4, 5 attributes of a great trade. Let me know your thoughts in that comments section below, ladies and gents. Everyone's different, everyone looks for different things, but I think these are some of the best things you can have when you're taking the trade. Yes, they're quite broad. Yes, they're quite flexible in some ways, but at least it gives you a framework to work on. I'm a big fan of kind of bringing a framework and at least having some structure to your trades. You can go check, 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 check. Great, and you're away. Take care, guys. See you in the next one. Keep the risk managed. Bye-bye.